And now, of course, we are coming to a very crucial topic that was touched upon several times in the discussions yesterday. It's about finance and markets, regulation and society. And this session is going to be moderated by Andrew Ferrone. Andrew is head of the meteorological department of the Luxembourg Ministry of Agriculture and head of the IPCC delegation, as well as co-coordinator of the EU negotiation team at UNFCCC. Andrew, the floor is yours to moderate this session. Welcome on stage.
Thank you very much, Petra, and good morning from my side. It's really a pleasure to welcome you for this last day of the Climate Neutrality Forum, which I think we had really rich discussions over the last days. And yeah, as you said, Petra, the term finance and regulation was definitely mentioned several times over the last days, so it would be good. It is good that we have now a session where we can deep dive into it. So we have 3 panelists with us, although I'm not sure if Martin is online. I don't see him in the room. We will check. So first we have Elina Roine. That's correct? Yeah, please join me on the podium. She's Department Director for the Operational Support and Climate at the European Investment Bank. And she focuses on enhancing impact through smart financing and advisory solutions. So Elina will give a short presentation of around 10-15 minutes as an impulse to the discussions, and then I will ask the other panelists to come to the floor. Elina, the floor is yours.
Thank you very much. And yes, I have been asked to give a short impulse speech, and I would like to first say thank you to the organizers and good morning to the audience, the esteemed panelists and speakers. It really is my pleasure to be here today representing the European Investment Bank and in a way the finance community. Then I will, in my short impulse speech, start with few words for scene setting, and I will then go on with discussing a bit the dual investment challenge, namely the need to not only to invest to the existing low carbon technologies, but also to innovation and scaling up emerging new technologies. And then I will finish my speech by giving you few concrete examples where smart incentives, interventions and collaboration at the right time between public and private actors have actually resulted a sector level transformation contributing to the climate, to the low carbon transition. Before, though, I jump into my speech, just few facts about EIB as a reminder. So the European Investment Bank, EIB, is the Bank of the European Union. It is owned by the EU member states. Last year, our annual lending volume reached 88 billion euros at the group level, and this lending is supported by current balance sheet of approximately 550 billion euros. And these numbers make us one of the largest IFIs globally, alongside with the Germany's KfW. Secondly, the bulk of our financing flows into projects and investments in the European Union, but we are active globally. And then finally, as the EU Climate Bank, we are committed to the goals of the Paris Agreement, namely the temperature goal and the resilient pathways. We have also pledged to support 1 trillion euros worth of investments in green over the critical decade until 2030. And as our Climate Bank roadmap stipulates, our goal is also to ensure that not less than 50% of our financing goes to projects supporting climate action and environmental sustainability by 2025. And here I can confirm that we are well on track on meeting these objectives. Specifically in 2023, almost 60%, 56% to be clear, to be specific, of the group financing went to the green projects, and we are also aligning all our operations with the Paris goals, and we are on track of meeting the 1 trillion target, hopefully by the end of the decade. So after that short facts and figures reminder, I then move on to discuss a bit the financing and innovation challenge. But just as the scene setter, as we have heard, the writing is on the wall. We are witnessing climate change globally, and here in Europe, in the continent that actually is the fastest warming, we have too much water, too little water, frequent and severe storms, wildfires, glaciers melting at the alarming speed. We all have witnessed that. The cost of non-action, actually, in the long term, is now projected to significantly exceed the cost of investments needed to combat the effects of the climate change. And the scientific evidence is undisputed. The climate change as we experience it today is man-made. Many of you probably have consulted the European Climate Risk Assessment that was published by the European Environmental Agency earlier this year. And this assessment identified 36 climate risks that now pose a threat to Europe's energy and food security, ecosystems, infrastructure, but also water resources, as well as people's health and financial stability in the end. It also shows that these risks have already reached critical levels and can become catastrophic without urgent and decisive action there. So science can tell us what's happening and show what needs to happen to slow down the global warming and reduce the impacts of the climate change. But how is then a bit of another matter. And there, let me now move after the scene setting to elaborate some of those hows. And a few words first about the 2 I's. Professor Nicholas Stern has coined the term the 2 I's to refer to the dual challenge that we are facing of the in the low carbon transition and resilience, investment and innovation. We need to innovate and develop new clean technologies, and we need to invest to replace existing technologies by cleaner ones. Investment and innovation must occur in parallel. So that's a must. The positive news is that, for example, in the energy sector, 90% of investments in electricity production last year were in the renewable space. And as for the innovation, the technologies that are not yet in the market that are needed for low carbon transition, the percentage of those technologies over the past period has decreased from 50% to 35%. So we are investing to low carbon, and we are innovating and bringing the new technologies in the market. And now most of you may be familiar with the S-curve of the technology innovation. But to explain that a bit, I'm quoting Ernest Hemingway, who said when he was asked how he went bankrupt, he said, it happened 2 ways, first gradually and then suddenly. So the technology change often follows the same logic, okay? The innovation process, prototyping is slow, it's risky, it's not straightforward. It's a gradual process. And then rather suddenly, oftentimes, the breakthrough happens, the innovations gets then scaled up, and the whole industry can pivot afterwards. And that actually brings me to the financing challenge. Innovation and transformation do not happen without fit-for-purpose financing. And here is the dilemma. Innovation and acceleration of technology change is an inherently risky and requires risk capital for patient investors. So to support that gradual process that is inherently risky, we need patient risk capital. Here is the problem though. The risk capital is usually not very patient, and patient investors are oftentimes risk averse. And against this backdrop, public finance has a role to play to support innovation efforts, but also to therefore improve that business case for scale up. Public banks, like the EIB, can leverage on those scarce public resources by not only providing complementary financing and liquidity, but also by way of offering de-risking solutions, including capacity to absorb those technology risks and early market risks that the private sector investors may not to be happy to take to start with and shy away from. And now let me give you a few examples for illustration where smart public-private collaboration has provided impetus for green industry level transformation. And first, let me say a few words about offshore wind sector from the perspective of the European Investment Bank as a public EU bank. EIB has supported the European offshore wind and energy sector from its nascency and provided indeed that necessary risk capital that was not available to start with from the private sources to scale up. EIB now, when you look at the market, we have financed more than 1/3 of the existing offshore wind capacity in the EU. While in the beginning, the EIB involvement was there and was pivotal for these projects to actually take off and the investments to happen, our contribution now has actually become less critical as the sector has matured. The risk profile of the investments and undertakings have decreased, and private financing has been crowded in. And now, as EIB is actually moving to the next frontier. We are providing capital to improve business case for new technologies in the wind sector, as for example, offshore floating wind farms. We are currently also supporting the so-called wind package to catalyze and provide financing to the European wind sector supply chain. With that, I would like to underline that the offshore wind example in a way illustrates how the public banks like EIB, by way of leveraging those public resources, notably the resources of the European Commission for de-risking, has a role to bridge that valley of despair and improve the business case for private capital, then to come in and take a chance of the new technologies and accelerate that scale up. Also, smart financing incentives addressing the market and demand related risks may be necessary to support early investment and financing decisions. So maybe subsidies or grants are necessary to make the business case palatable, and also conducive regulatory framework is important. And here, case in point and as an example, linked to the offshore wind, supportive feed-in tariffs are one of those examples I can mention. Another sector where EIB and the public finance alongside with the EIB has played a role is in catalyzing private investment and scale up in the European battery industry. Similar pathway emerging as for the wind. Maybe the jury is still out there. And maybe another final sector I would like to mention is the green hydrogen. Here, the debate is ongoing of the role of the green hydrogen in the low carbon transition, but we believe that it has an important role to play, in particular when we talk about the low carbon transition of the hard to abate sectors such as steel or cement. And similarly to the renewables and the battery technologies to a certain extent, scaling up and up supply and demand of the green hydrogen in Europe will mean further investment efforts and innovation efforts as well to catalyze that industrial transformation. Not only that, it also entails a need to invest approximately 200-300 billion euros in renewable energy capacity to support the H2 production. And here, large-scale deployment will be critical, actually, to reduce the cost of production, again, and offtake price that currently remains above the one associated with those conventional technologies. What I'm trying to say here is that the green premium, as we call it, needs to come down for the end users for the demand to go up. And again, regulation and smart incentives will need to play a catalytic role, including setting the right price for carbon. And now let me just try to conclude with few messages. First, positively, I think the momentum is gathering and the high emitting industries and value chains are pivoting towards low carbon. However, we need to mind the massive investment gap that we are still observing between where we are today and the net zero, including the need to invest in innovation alongside the deployment of existing low carbon technologies and infrastructure. Secondly, I would argue that overall, this is a bit provocative, there is no lack of capital for financing, but we are rather struggling to match the financing needs with the risk appetite of different actors. And here, closer partnerships between public and private can catalyze the matchmaking, and public banks like EIB can play a role in leveraging those scarce public resources for risk sharing and absorbing some of those risks that the private investors, as I mentioned earlier, are not yet willing to take. Also, what is required is a push for action to ease investors' access to more diverse source of financing, and this includes integration of the EU capital markets. And my final point, we need to recognize that we cannot finance ourselves out of the poor business case, okay? What I mean by this is that the public funding, grants, subsidiaries, smart incentive schemes can help, but are not the panacea. The private sector needs to play a role, and we need to work through the value chains and try to stimulate both supply and demand side for scale up in order to reduce that green premium I mentioned before and improve that business case for low carbon and resilience for private capital to be crowded in. I think here it's important to emphasize that this includes policy and regulatory frameworks that are conducive, but also it includes increased risk identification and assessment capacities amongst public and private and financial sector actors. Again, we need to price that carbon, if you will, correctly, and those climate risks correctly to build the business case for green investment. The green technologies need not only to be accessible, but also affordable in order to compete with the brown incumbent ones. In conclusion, ultimately, to make the business case for green, the price for non-action, in a way, as is, need to increase to exceed the price of climate action. And I'll stop there.
Thank you very much, Elina. And please take a seat. And I would also invite Anita Simon to come to the podium. Anita is the Deputy CEO for Sustainability and Circular Economy of the ALTEO Group. And it's the first company in the Hungarian energy market to obtain the international ESG certification. Thank you very much for joining us. Nice to meet you. And just checking, is Martin online? No, he's not online, so... Market failure, yes. Okay, so let's have a seat. And Anita, maybe I invite you first if you want to react maybe to the speech or have some introductory work from your side.
Yeah, thank you so much. Elina's speech was fantastic. Congratulations. Because there are many factors very true today. Let me start with some private impression. I spent 10 days in Nepal, so it's not obvious that we have energy and electricity in every minute of our life. So we are lucky and very comfortable in Europe that we have this facility. And according to E.ON's researches, Europe has to spend more than 185 million euros on a daily basis to increase the grid capacity. So what does it mean? It means that we need many innovation, and we need the green transition in order to fulfill the energy demand of our daily life. It's not just private life, but also industrial purposes as well. So my company ALTEO has been established 15 years ago, and we said the founder said that energy is a key market possibility for the future. And that's why they are ready to invest. They didn't know how to improve the company, but they said that, yeah, energy sector is a key issue nowadays. And it was at the beginning, we invested to the gas engines and also for the traditional gas industry sector. And at the meantime, we realized that our DNA has to be the sustainability. That's why we started to invest also to the renewables. Nowadays, we have 110 megawatt capacity of renewables. We are the second biggest one of wind capacity. We just extended it last week with one acquisition. And we also producing biogas, and we are working on biomethane projects, which means also green transition. But nowadays, currently, we are producing electricity. And also we have solar farms, so PV, it's not a big amount of quantity, but it's above 20 megawatt capacity. And the company itself has a virtual power plant, which means that we are coordinating the traditional power engines and the renewables to the grid. So it means that we are using high quality of AI and IT background. And also we have 8 employees forecasting the weather. So weather prediction is very important in our business. So how can we improve ourselves? We would like to be the part of the green transition, and ESG gives us the path and the rules how to make it. Because every year, as a company, we have to prove that we made efforts to the green transition, and we just saved CO2 on a yearly basis. How can we make it? It's very difficult, I think, according to the current circumstances. But what we do is we are the first company in Hungary who invested in batteries. So we have currently 11 megawatt capacity, but we have subsidy. So we are increasing our capacity with 70 megawatt. So it means that we will be the biggest one in Hungary. And we are going to install also, not just, so what our estimation is that battery is not just a battery, but it has to be a flexible equipment, not just providing help for the traditional capacities, but also for renewables and also for providing a kind of increase for the e-charging facilities. So e-charging is also a big deal in our company, or an issue in our company. That's why we are focusing on it. And if you are a company, you have to understand what is the business case in it. So the green transition has to be beneficial. Because we are a stock exchange company, a registered company, so we have to prove to our investors also that we are profitable. And doesn't matter if we are ESG certified, doesn't matter if we are investing, and doesn't matter the green transition. A profit at the end of the day has to be proved to our investors. So I think this is for the beginning, and but it was a very interesting presentation, because I think there are many focuses in it. First of all, the policy, the subsidies, and the really clean vision of the European Union and of the policymakers about the future and the next steps.
Yeah, absolutely. Thank you very much for also your inputs on this one. And before opening the floor, I would like maybe to come back to one of your points, Elina, about de-risking strategy. I mean, we talked a lot about risks, about physical risks, about risks of different technologies here in the future, but this is now a further dimension of the risks actually, and even a de-risking necessary. Maybe you can dive a bit deeper into that topic, if that's...
Yes, thank you for the question. And indeed, I stand by my statement that often it's not so much about availability, but it's the question of accessibility and also the availability of the risk de-risking capacities. And here the bank, as an EU bank, we are well placed to indeed leverage the public financing, namely in particular the funding and the guarantee capacity, if you will, of the European Commission, and thereby absorb through our financing some of the risks, financial risks embedded in the technology and market risks that the private investors may not be willing. And with the instruments that we make available to our borrowers of various kinds, we can optimize the capital structure of the investments and in a way make the business case better and crowd in private sector. Just in this regard, maybe to note that EIB never finances projects alone. So we always want to see other investors to be crowded in through our intervention. I mentioned the 1 trillion. That is also a demonstration of that crowding in desire and objective, if you will. And in terms of type of products for risk sharing, I would specifically mention our venture debt financing. Venture debt is an instrument that, in particular, in the innovation and scale-up space, is lacking in Europe. There is a market gap there, And since 2016, the EIB has been providing a venture debt product in the market. It's with its sort of quasi-equity features, and it has been very, very successful. We have, in a short period of time, become the largest individual venture debt investor in Europe and facilitated the further financing rounds of really interesting companies. One to mention here maybe is a transaction that we signed last year with an Italian company, Energy Dome, that is a startup or sort of a young, fast-growing technology company focused on long-term energy storage solutions. And here, I think why I'm mentioning this, EIB venture debt or kind of a risk capital financing accounted to 25 million, but this company also, in collaboration with us and Breakthrough Energy, benefited from 35 million grant from Breakthrough Energy. And this shows that, again, one of these smart financings that I talked about, public finance, leveraging private capital, but also crowding in philanthropy, that I think we also need not to overlook here. Yeah. So I'll stop there.
Okay, thank you. Thank you very much. Very interesting indeed, and also nice to have the link with the energy sector, because clearly it plays a very important role in the transition. My microphone is working fine, yes? Okay. Do we have the dice for the questions of the public? Let's see. Thanks, and Maria.
Yeah, there's been a lot of expectations on that we need to promote the circular economy, and for Europe is a fundamental pillar. But the circular economy is much more complex, because it requires a combination of SMEs and very small companies and so on. So, and also requires a systemic vision in terms of what is the ecosystem you want to promote. So, is any attempt by the bank to address these complexities with some more complex financial schemes?
Yes, thank you for the question, and you are absolutely right. I think circularity clearly has to play a much more increasing role in our fight against the climate change and its impacts, and when it comes to use of natural resources in particular. And for example, in the battery value chain, we have financed recycling related projects, just as an example. But generally, circular economy is one of our focus areas in the Climate Bank roadmap. That is not to say that it is not without challenge for a debt provider or financier to finance circular economy projects. We are, however, looking very carefully into this space, and we have financed large number of projects that entail also circularity, and looking also to finance younger technology companies that are contributing to the circular economy segment. And all our, the product suite that we have, from senior debt to this high risk capital, is deployed also to support projects and investments in the realm of circular economy.
Anita, you have any?
Yeah, thank you. Circular economy, I think, is the key important question nowadays. And if just an example regarding, for example, the biogas, biomethane projects, It's obvious that we are producing biogas, and we have the end product, the electricity. And the question is always, one part is financial and the other part is regulatory. So if the green credit, you mentioned, the green credit price is fixed and you can calculate for minimum 5 years, the investment is easier. If the policy is clear, the investment is easier. So how can you improve, how can you increase the investments in green transition and in circular economy? Is, I think, there are many ways, but there are simple ways. We have to choose the ways as simple as possible. So clean financing, clean pricing, and also the very, very transparent regulation. I think that's it. And why I'm talking about it, because we are in front of an investment which is considering how can we produce biomethane instead of producing biogas electricity, and using the circularity, because we are our input for the biogas plant, which is 2 megawatt capacity, is the organic waste. So it's completely circular.
Yeah. Again, the problem of the estimation of the risks,
yeah.
which is important, yeah. Absolutely. I saw Ole and then Frank. Ole?
No, thank you, and thanks a lot for very stimulating conversations and a presentation, and also having the energy services present here is very useful, I think. I became sort of curious on during your presentation, Elina, on what are the sort of basis or the basic knowledge that you need as an investment bank provided by the scientific communities on where your priorities are going. You mentioned wind, you mentioned solar battery, and you also now mentioned that offshore wind is something that you are looking more and more into. But what are the kind of knowledge that makes you available or make you in a position to take these kind of decisions? Mm-hmm. That's one question. And the other one, I'm Norwegian, so of course I'm interested in how the collaboration between the big banks and these big pensions funds that are out there, and because of course the sector can influence itself indirectly by sort of momentum here and there. So if there are ongoing collaboration with, for instance, the Norwegian pension fund. Thank you.
Maybe I can extend it to other pension funds of member states.
Both very, very interesting questions. Let me start with the first part. Maybe there are 3 points. First, as far as the green business development or direction of travel and on us financing green, we take the cues and the guide rails from the EU Green Deal. So the EU Green Deal key objective areas are those where we are specifically focusing on. That's first. Secondly, I think what sets EIB a bit apart from commercial banks, amongst other things, is that we have a large number of engineers, climate economists in-house that do provide input and actually draft our lending policies together with the banking. Also taking, of course, then guidance from the latest scientific papers and scientific knowledge that is out there. And we collaborate also with the scientific community. We in terms of adaptation, resilience, and space, for example, we collaborate with Copernicus and use their data also to inform our own climate climate risk assessments and technical and economic assessments that we carry out for our projects. So that was the second point. And of course then when you talk about where we really direct our financings alongside with the guide rails provided by the Green Deal, of course the focus currently is on sectors that are really key for the low carbon. So the high emitters, energy sector is one of those that we have been financing significantly. We are contributing to the Repower EU, and it's not only building and supporting the capacity, the power generation capacity, but we are also working with the value chain. I mentioned the wind package and the European technology value chain in order to support then the whole sector transformation. And grids were mentioned, very important element for us in the energy space, as well as energy efficiency, because the cheapest energy is the one you do not consume. So let's not forget about that. Of course, low carbon transport is a sector that we are focusing on as well. And we talked about innovation. I really believe that we need to, in Europe, but also globally, support the green tech innovation, clean tech innovation, and its deployment and scale up. Final thing, so those were kind of the big themes, and one specific point I want to mention is adaptation, resilience, and sustainability there. Adaptation is a difficult nut to crack, but we have set ourselves quite ambitious targets. By 2025, we have pledged that 15% of our climate action financing would flow to adaptation and resilience. Last year, the number was 6.5%, so we are still there is still some ground to cover to the 15, but we have already over doubled in terms of volume our adaptation support to adaptation investment. And there it's not only about large transformational projects that are important, in particular when you talk about water resource management or flood protection, both in and outside the union, and also support to agriculture, for example. But it's also mainstreaming resilience in other projects. So I think now we have, based on our own risk assessment methodologies, when we look at projects, all our projects and investments need to be adapted. So if we recognize gaps there, we would have a dialogue with the investors to make sure that all the projects that EIB gets involved in are adapted. What I personally, and I finish with this remark, I tried to work on, and I know the European Commission is speaking the same language. I think in order to catalyze adaptation investment, it is we as a sort of stakeholders, we need to try to move the narrative away from sort of negative, meaning the cost avoidance, but rather to positive, to retention, to work on the notion of retention of future returns, rather both in the public and private sector, and there again it is about understanding the risks, pricing the risk correctly, and those who need to invest should be aware, as I said in my early speech, that the cost of non-action is already well exceeding the cost of that investment that would be needed to make, for example, the current infrastructure resilient and future-proofed, and indeed secure those future returns, be it then company returns or tax returns in the public sector.
Anita, do you want to add something on the use of science?
Just only one thing, that the whole value chain has to be analyzed, I think, when we are talking about the investments and the value and about the new technologies, because if we are just an example, energy storage is as simple as possible, not just for the power generation plants, but for e-chargers, and maybe it affects not just the charging facilities, but also the automotive industry as well. And also, what about the batteries, the lithium batteries, because we have to recycle everything. So I think the complexity of the question is a key, not just to understand what is the technology and the investment, but also the surrounding and the whole value chain.
Maybe just the last part of the question, very shortly.
Then I come to Frank, because
yes,
he's getting
very shortly. You mentioned the pension funds, and I think you put your finger to a sore spot there. In Europe, as I mentioned before, we need much more integrated capital markets. If you look at how investments are financed, still the bank financing accounts for, I think, 70% of the investment, while in the US, for example, we have a completely reverse picture. Capital markets play a much stronger role in financing investment. And through the capital markets, we get the engagement of also the pension funds and those long-term patient capital investors. So I think there is a lot of work to be done in Europe to really catalyze and mobilize all sources of financing to support the green transition, and that includes also the pension sector. I'll stop there.
Great, thank you. Frank.
Okay, thank you very much, and really interesting conversation. Just on the big picture, obviously Article 2.1c of the Paris Agreement, financial flows, you have a key role in implementation of that. How do you go about doing that, I suppose, and ensuring that the financial flows are transitioning away from the brown into the green, so to speak, in terms of the investments across Europe, or have your role in that, I suppose. Then, I suppose this is a familiar one, the scale issue. Just before you started, we had that discussion about land and farmers, and often you have some of the poorest of the poor in Europe and they're very vulnerable. They don't have the assets, the upreach to get to the big finance. Yet you say there's loads of money there, but it's how do they have you a role in facilitating them to do what's needed? And then Anita, just on the pension funds, would you recommend pension funds invest in renewable energy companies in terms of the future? And what is the enabling environment? If you're doing biogas, you need an infrastructure there to enable you to do that. Do you need that infrastructure from some source, or do you create it yourself?
Please.
Maybe I start with the second part of your question. How do we reach out to those smaller investors, if you will, be it farmers or small and medium-sized enterprises, both of which are really important when we talk about low carbon and resilience going forward. The European Investment Bank itself is not in a position to reach out directly to these type of investors or borrowers, if you will, but we work very closely with large number of commercial banks and providing both liquidity but also risk sharing capacity to commercial banks to then direct the financing to green and resilience, sustainable projects. When we launched our roadmap, the green was not huge part of the financing we extended to commercial banks, but nowadays it is more of a rule than an exception that our credit lines we offer to financial intermediaries, both banks and leasing companies, have so-called green windows. And we have, for example, dedicated facilities targeting particularly farmers in Europe to invest in greener agriculture and resilience. So maybe that so through financial intermediaries, very big part of our value proposition actually. Then the second part of the question is how do we ensure that the financing flows are directed to Paris-aligned projects. So we can, as I said, we try to catalyze and crowd in investors to projects that we finance. And how we then vet the projects, we have in place at the project level so-called low carbon framework, which sets the guide rails for our Paris alignment. And there, for example, we are shying away and stopped financing of projects that are linked to fossil fuels based on our current energy lending policy. We are also not financing projects in the industrial sectors that rely on technologies that are fossil fuel reliant or based. And we are also not funding projects, for example, in the area of, we don't engage in airport extensions because there isn't a clear low carbon pathway for airline industry. So they're just some of the pointers. So all the investment we finance go through the screening through our low carbon framework that is actually publicly also available. So you can consult our climate bank roadmap on that. However, we recognize that we need to support those who truly want to transition, because if we only would finance those who are already kind of there, that would not be particularly helpful. So we want to engage with entities and companies such as the high emitters who are willing to and want to transition. And we have developed so-called path framework, which sets the frame for us assessing Paris alignment at the corporate level, not only at the project level. And we do require all our counterparties and borrowers to have credible transition plans with justified medium-term targets and the net zero pathway. So that is sort of, we work with the companies again that are willing to transition, because I think that's where the work needs to be done and that's where the financiers can engage. And I think with our intervention and with our conversation with the clients, we can push them further down that low carbon pathway, and at the same time also then entice other investors to come in and invest alongside us.
Anita, you want to react to the question about energy in the pension funds?
So regarding the biogas plant, when we started just the idea to build up a biogas plant, it was 2010 or something like that. And we invested ourselves to the project. And we have, of course, we needed finance, but it was through a commercial bank. And there is no subsidy on it, which is very different from the average Hungarian biogas plants. And that's why we we consider it as a basic investment to the biogas sector. And of course, it's difficult because of the energy prices due to the Ukrainian and Russian war increased a lot. And at that time, it was first time 2 years ago, the biogas plant was profitable. If the energy prices and the electricity prices are lower, of course, profitability is less. So we have to find the impacts of the profitability, which means that we have to increase the technology to biomethane. And if we are talking about the biomethane, I'm not just considering it because of the way of the gas independency of the country, but also as a part of the transportation possibility, because it can be not just gas independency, but also the part of the transportation, biomethane, LNG, CNG, electricity, e-mobility. So this is the transportation mix, energy mix, what we can use. It's the question always, what is the percentage of each part? So if we are talking about the biomethane and the financing of biomethane and the future of biomethane, I think it's not just about the gas and the grid question, but also about the transportation mix and also the investment question. Why to invest to energy sector and to maybe to biogas and biomethane sector? Because it is an increasing market. Without the renewables and without this market, we are not competitive. So if we can invest and we have the money to invest, I think green transition is the one which has to be profitable, and not just the banking sector has to finance it, but the private sector as well. So I offer it for investment.
Thank you very much. I think that's a very nice concluding remark for our session, because I think we are at the end of the session. So I think for me, the main takeaway is on the one side that it's not so much a question about capital, but a question about de-risking actually, which is very important, but also that the energy sector and the transport sector play a major role in this alignment of financial flows, as Frank says, was highlighted also in the Paris Agreement, the 2.1c. So thank you very much again for coming today, and thank you for the nice discussion we had.
Thank you.